Hello everyone, my name is Marcello Kolax. I am the Managing Director at Clever Markets, and today we're going to have a look at the markets starting 18th of September 2023. We're going to have a look at the TTF, we are going to have a look at Brent, and we have a look at EUAs, so European Carbon Markets. All right, let's just jump right into it. So as we can see, we are on the TTF front month weekly chart now. So one candle represents one bar of trade, 1 week of trading, and we can see that not so much has happened for, well, quite some time. Just as a little reminder, for me, just zooming out, we had this ginormous uptrend, and then we had this downtrend that started in August 2022. We've moved lower, and then we started pushing sideways. So that's why I am. That's why the midterm outlook for the TTF is neutral. So zooming in, we can see that for the. By the way, for when we zoom in, I like to have a look at not the semi-log chart, but I look more on the arithmetic chart because semi-log is good for high volatility prices, like this sort of thing here, or when we are looking out for like the really long term. But when you zoom in and really just have a look at a couple of weeks, then it's usually best to start looking at the arithmetic chart. So what is happening here? Okay. So we do see that we are within this rectangle that's in the 22.85 and 49.8 range, and the market isn't really doing all that much. So let's have a quick look at what the tools are saying. So you can see that the MACD has been pulling higher, but this is not due to bullish conviction. It simply means that there's not much happening either way for the bulls or the bears. We are sideways after all. In those sideways markets, it's usually good to start looking at volume and oscillators. So what you can see here is that, so oscillators, they do give us good trading range signals, but that's best for the daily chart that we'll look at in a second. For now, what we see on the weekly chart is, so remember we had this long downtrend, a little bit of sideways trend. And looking at stochastic or any other oscillator of your choice, RSI for example, CCI, we can see that we are making higher highs and higher lows, whereas the market is moving sideways. So this is a sign, is a puzzle piece that eventual upside resolution might be more likely than downside continuation. Then the next thing we can look at is volume to see on what legs the volume goes. So is the volume more on the up legs or more on the down legs? So where do traders actually put some value? So let's have a quick look. We do see that we do have like two green candles, which is 2 week of trading. Higher volume. By the way, this was Australian strikes, or just the announcement of it. We have a little bit of sideways and going down. What is volume doing? Okay, volume is going down as the market moves sideways. That could be just a sign of market indecision in general. Then we move higher again. Oh, volume is going up a little bit. Okay, maybe the market mood is changing. Now a little bit of sideways, kind of like softening. Okay, market isn't moving all that much in terms of volume. So with the two pieces of evidence available to us right now, oscillators pulling higher while the market is sideways, and a volume somewhat accumulating on the upside, on the up legs, would suggest that eventual upside continuation seems more likely as of now. So, one thing I want to mention here, and I think I don't say that often enough, there's a difference between trading and analyzing. So I can say, and or any other technical analyst can say as much as they want that what direction is most likely to be what the market will be resolved to, but this is not trading, right? So if you want to trade, you still have to put your entries and exits, stop loss strategies, and all that position sizing. Everything has to be in place. So this isn't really helpful for the actual trader. But what it helps with is actually seeing when the trend will resolve. So when is any doubt removed that the direction is established, so above 49.8 or below 22.85, then we can make a trading decision. So let's say, so still, if possible, I mean, this is a very slow moving market. Yeah, we're looking at the weekly chart. Um, but putting a short entry maybe just below 22.85, or you're waiting for like 1 or 2 consecutive weekly closes below it, or you're putting just a long entry just above it, or you wait like 2 consecutive weekly closes above it. Once again, it's very slow. Then you maybe want to enter long. Yeah, maybe put a stop loss. Well, I like to use the ATR with it. Maybe put it like 2 ATR below the entry level. Yeah, that would make sense, for example. Then if I like a minimum upside target, which is at the moment the width of the rectangle, I'm just copy pasting that, and I'm just putting it here. Yeah, so you can see this is the minimum target. It doesn't mean the market will only move until there. It just means it's the minimum. So keep keep the good trades running and cut their losses early, right? So you could probably retrace it further, and then we would even start looking at using Fibonacci retracements of this entire uh, downtrend here. But that's not where we are right now. Right now, technical analysis only helps us on the weekly chart to say better not put any on any large positions, any medium-term positions, as long as we are in this range. But we know when we are outside of this range, then we can actually start looking for longing opportunities or shorting opportunities. So can you see, I hope I made clear that I'm not trying to look for like the perfect forecast, because forecasts are about to be wrong. So now let's have a look at the daily chart. One candle representing 1 day of trading, and I'm zooming in and I am using the arithmetic chart. Yes, that's what I'm using. And you can see the rectangle is the rectangle as we see it on the weekly chart. And on the daily chart, what's happening here? Well, something interesting. So a couple of weeks ago, we did start seeing higher highs and higher lows, higher highs, higher lows. So we did have a little bit of a bull trend going on within this rectangle, which is within this medium-term sideways trend. We also did push above the 20-day exponential moving average, which in this case was almost a little bit late, but that's what the market gave us right now. So overall, it did look pretty bullish. We also did see that the MACD moved above its zero line. It all looked good, and so the market was bullish confirmed until here. By the way, this was Australia. And then, fairly early on, we were able to identify, okay, so this uptrend has probably run its course, because we did start making lower highs. So the highs got lower, the peaks are lower, and the lows got lower as well. And then I think it was last week, I had a fairly bearish stance, although it wasn't really confirmed by the MACD yet, yeah, but there was definitely not so much bullishness in there anymore. And I was actually fairly bearish, but now we can see the bears didn't pull through. We didn't push below this preceding low, because that's what you want to see, right? You want to always like push below the preceding low, push below the preceding low, so that you actually have that downtrend continuation. Didn't quite happen. So where are we now? Sideways. We are in a sideways market for the TTF in the near term. So there's not really a lot of like buying or selling opportunities here either. So can you see what's happening here? So if we push above this range, then probably we could start taking the upper rectangle boundary on the weekly chart. If we push below the range, 28.98, then we could attack the lower rectangle boundary. So TA, we are not trying to predict the price. I think this is a little bit of a marketing, a PR flaw, essentially. What you're trying to do is technical analysis is a bunch of if-then computerized statements. If we move above this level, the near-term sideways range might be removed, and we could easily move until here. If we move above this level, then the midterm trend is most likely resolved to the upside. Confirmation pending, of course. So what do? Do you don't trade at all? Do you take? Do you tell your trading manager to not take any trades for like months and months and months? Probably not. So I know that speaking to most of you, you are probably trading in the 15-minute time frame. I see that is very popular. Of course, the 1 hour time frame as well. So what you can do here is actually trade the smaller swings, which are, as you can see, a little. So you have a little bit. You can enter them a little bit earlier. You can drive them to their ultimate conclusion, ideally, yeah, and then you can take profits, even though theoretically we're in a sideways downtrend. And can you see where fundamental analysis breaks down a little bit? So fundamentally speaking, yes, we are bearish, but the market has been moving sideways for 2 months. Yeah. So are you gonna just trying to? I mean, are you gonna go short in a sideways trend? I don't think so, right? So right now, TA is telling us, even though the fundamentals are still bearish, that is still correct. That is not wrong. But is now the right time to trade on those fundamentals, on those bearish fundamentals? Well, the market says no. So and why would we then, right? So the question is, do you want to be right or do you want to make some money? I know what I'm doing. Then looking even further into that, we can see this is now the 15-minute chart. That this here, oh, this is a good support level. Whoop. Let's put this somewhere here in this range. We'll support here once, twice, 3 times, 4 times, and it is also this gap. So it is near this. By the way, this is not precise here. What is this? A horizontal line near 34 point something. So we do see a little bit of support holding since the 8th of September. So we haven't really made much progress here either. So, but it does give us like clear boundaries for the intraday trade. So you can still trade, there was like 34 and the 39, 38 boundaries. You can still trade this reasonably well. So here's a limit to how much anyone can or should do. So if the market range, for me, to be honest, is a little bit too tight, probably I wouldn't really trade if I absolutely didn't, have to. Sometimes TA tells us when not to trade, and usually during these sideways periods or when traders get bored, it is very difficult to just sit on your hands for a little bit. But that's the only way sometimes you can preserve money. And as traders, we try to do only 2 things. We try to increase capital and preserve capital. And right now, waiting would definitely preserve capital more than it would probably increase it. Unless you're working with really tight risk management, which of course I assume you do. So uptrend probably until 37 point something, yeah, upper this range, or this here is looking like halfway, a little bit toppy. We can see that the stochastic isn't really, it's looking a little bit hingy. So hinging means that it's the upline is like softening a little bit. We still have the MACD above its 0 line, yes, good, but we do have like small candles, so maybe we see a little decline and below the towards the 20 exponential moving average on the 15-minute chart. So probably like here a little bit decline, but as soon as you move below it, I would probably exit any short position. However, I do understand this is a weekly video, and you're probably watching this on a Sunday or Monday. So ideally, you wouldn't probably not have any of this like short-term positions open over the weekend anyway. But this is just to explain to you how my mind works. Okay, so back on topic. If the range gets smaller and smaller and smaller, there's a limit to how much you can do. Because 15 minutes, the market moves pretty fast. So what do you, if then the range gets smaller, do you say, okay, you know what, Marcello, I'll just go on the 5-minute time frame? Well, then the question is, can you, as a person, or the 1-minute time frame, or you go on the tick time frame, can you, as a person, even if you're like manually putting in your buy-sell orders, could you even react that fast? Maybe not. That's my guess. So if you're seeing yourself move into like the 10-minute or 5-minute time frame just to get an edge on this tiny up leg, then maybe we will leave this to the automated arbitrators. Maybe that's not us right now. This is a different level of trading that humans simply cannot react to. And then we're talking about like micro scalp trading. Okay, cool. That is the TTF. TTF weekly chart, neutral. TTF daily chart, neutral, but with an opportunity to maybe trade some intraday swings. Sounds good? Good. All right. Save these changes? No, of course not. Okay, so let's have a look at, let's do a little of Brent. I think Brent had a really good run for quite some time now. And where is it? There you go. There. I can't read and talk at the same time. Let's open all of these. Okay. So Brent did have a very good run, and anyone who was maybe following me might have had the chance to get into the market at probably around 85. And now, yeah, we are moving consistently higher. We are already at in the 90s. So yeah, not too shabby. So what is happening? Okay, so you all remember big up leg, a little bit of a sideways motion in summer 2022. Then we moved a little bit sideways. And then I've already removed this from the chart just for chart clarity. It's gotten a little bit messy. We did start moving into like this sideways trend, right? This was since yeah all of 2023 so far. Then we shifted a little bit lower. We had this lower rectangle building, and fairly early on, we were able to essentially establish that yes, we are in an uptrend now, and the uptrend is defined by this trend line. It's getting a little bit steep. We have removed quite far away from it, but we are still in an uptrend. So let's have a look at the tools. Let's have a look at the tools. Okay, so we do see that the MACD is still firmly bullish. There's nothing to worry about here. We do also see that the stochastic, although in overbought territory, which by the way is nothing to worry about, we are simply in a strong uptrend. We do see that we are making higher highs and higher lows, so that is good. It's confirming the trend. What's the volume doing? You can see that the volume is on the up legs and not so much on the down legs. Good. So I do expect that the uptrend will probably continue until this rectangle target near 100. I think 100 is very reasonable at this point because there's not, to be honest, there's nothing else in the way. It is the target of the rectangle. It is the most recent high, and it is a psychological number. So that means that traders with different trading styles or different trading time frames, they're all looking at the same kind of number. So that's good. That's good. That's encouraging. So when are we wrong? We are wrong as soon as we push below this trend line. That would be a big warning. And then also the bull trend will be completely over if we start making a lower low, which would be at this point here in 81.94. But it would be a steep drop, so better get out early if it was to happen. If it was to happen anytime soon. So midterm outlook for the for Brent, bullish. Okay, let's have a look at what am I doing? Let's have a look at the daily chart. Sounds good. Daily chart. So you can see this is this up leg. I turned it into a channel. This looks a little bit neater, and we can essentially zooming in. We can anticipate where the market is most likely to top out. And can you see what's happening here? Aha! What is this? This is a hanging man, or maybe even a doji, if you want to call it that. It's a little bit of a basket case here, this one here. Okay, we do have a bearish reversal candle. We do have it at an important resistance level. We do see that on the daily chart, we do see that in overbought territory, the oscillator, stochastic in this case, doesn't make higher highs anymore. We're actually turning lower. These are all bearish signals that we will experience probably at the start of next week. And I think what would make most sense is if we probably touch the lower end of this channel. Why do I think that? I think that because it has been, yeah, the way the market moved since the entire up leg. Can you see this old peak probably now coincides with the lower channel boundary? So this would be a good level. You can see this peak here, this old peak. The market exactly retraced to this level as well, which is also the channel. How about this peak here? It also turned into support near, not quite, where the channel is. So I assume that we humans, we rarely change. So as long as we got a good trend going on, chugging along until 100, probably down to here before we pull higher again. So the near-term uptrend is defined by the channel. So we are in an uptrend, and the MACD is bullish. And the small retracement is more of an intraday retracement. So that means that this is good news for the bulls actually, because if we move a little bit lower, you actually can get Brent at a better price before we go all the way to 100. So this is good. This is good. It's maybe a little bit of profit taking, yeah. So I think there's nothing to worry about here at all. So let's have a look as long as we stay within this. Let's have a look at the 15-minute chart. We did have a broadening match earlier this week that was resolved properly. Actually, can remove this here now. And the resistance levels were taken. And as soon as we moved above the broadening wedge, we did get a bullish signal. And zooming in for anyone who's a little bit more on the cautious side, maybe you would have wanted to wait until we break above this most recent peak, which was here. You can see the market was really thinking it through at this point. But at the latest, you probably would have gotten in at this point to take the intraday up leg. So now, what is happening here? We have retraced significantly, and we are probably topping out here a little bit, because if the bodies of the candles get smaller and smaller, that means that the trend has probably run its course as well. Stochastic, however, doesn't really look all that bad. I mean, we're still making higher highs, so that looks bullish. And we do see that the MACD is still pulling higher as well, but it seems a little bit unsustainable. So because we do make like steep gains on the MACD and on the stochastic, but this here is like almost like a rounded top, I would say, yeah. So I would and this top would be below that top, so we are not making higher highs anymore, probably rather lower lows. So what's interesting to see here is combining it with what we saw on the daily time frame as well. So the daily time frame suggests a brief correction lower, and the 15-minute is a little bit indecisive, but it still looks like we are making a lower peak as well. So overall, I believe that yes, we might experience a correction lower, or at least this is more likely than a push higher. So, Brent, in summary, midterm uptrend confirmed because we moved above the rectangle. Near-term uptrend confirmed within the channel, but we might see a brief pullback this morning. The target is 100. Isn't it much nicer if TAs just summarize the more like actionable steps like this? Isn't this aren't you having as much fun as I am? Okay, before we move on to carbon, here a quick reminder that on the 19th of September, I'll be hosting a free technical analysis webinar on trend spotting, because it's one of the basic tenets of technical analysis. So do have a look. I'll put the link in the description. Second thing, I don't want to overwhelm you. A second thing is starting in the 25th of September, so that is it next week, I think? I will, no, it's in 2 weeks, or in 1 week then. Yes. I will launch the 7-week Technical Analysis Academy for Clever Markets. So I'm very proud of this. It starts on the 25th. I still have just a couple of slots available, not too many. And it is, I truly believe that this is the best course on technical analysis, specifically for European energy markets out there right now. It is highly focused on practical application, and there's a lot of exercises and quizzes, and I'm very proud of saying there is one-on-one sessions. So once a week, you get 30 minutes with me, and you can, it's more like a one-on-one coaching as well. The lectures are top-notch and industry standard, so I highly encourage you to sign up. You can go to clevermarkets.com and you have a look at the training page here. I also have a link in the description. Carbon weekly chart. Okay. In the long term, uptrend. Mid-term, sideways trend within this rectangle. Ascending triangle. The upper boundary is 100, important psychological level. It's been hit 1, 2, 3 times, so it's firm. The lower end, 1, 2, 2.5, 3, and now a 4th time was hit. Haha, but now we closed below the below the ascending triangle for a 2nd consecutive time. Now, admittedly, this is spinning top showing a little bit of hesitation, but overall, the idea is bearish. What are the tools saying? We are on the stochastic making lower lows and lower highs. We immediately moved into oversold territory, which is normal because we are making new lows. That's fine. It's not a bullish signal, reversal signal. The MACD very comfortably, not at a steep angle, very comfortably moving lower, so that is good. And we can even consult like other tools like Ichimoku Cloud, for example, or Bollinger Bands, and we can see that we are pushing, or we have pushed below the Ichimoku Cloud. So don't get confused by all the lines. Ichimoku Cloud has a lot of lines going on. I only want to pull your attention towards this little thing here. This is called the lagging line. So you can see this line is behind, right? So every line ends here, but this line ends here. So this is like, so it's a lagging line. It's like a confirmation tool. So what we want to see is the price move below the Ichimoku Cloud, and also the lagging line pulling below the Ichimoku Cloud. So this obviously will still take some time, but overall the idea is rather bearish. We're also below the 20-day EMA, so bears, yeah, I believe, so my midterm outlook has turned bearish now that we have two consecutive closes, tools confirm, Ichimoku Cloud halfway confirms, and we are below the moving average. So I think the potential for making use of any, I don't know, longer term or midterm short position, the potential gain is much larger than the potential loss. When am I wrong? Well, I would say I'm wrong as soon as we pull back into the triangle. Then I would probably abandon my bearish thoughts, and maybe I would go more, maybe sideways almost. Here's one dangerous thing. So this here, what is this level? 77. This is important. This is an important level to take. And if you can wait it out, I don't know if you can, if you, depending on your constitution, because this level has been hit twice. So maybe waiting for it for a third time wouldn't be unwise. So in accordance with the clever markets methodology, we are bearish. If you're a little bit more cautious and want to play it safe, then I would rather wait until 77 is taken as well as support. Because here's the thing, if we it holds, and then it holds, and we push higher again, then we have a sideways trend going on. Yeah, then maybe you have like this sort of like range going on. Yeah, or maybe you have like a descending triangle going on within an ascending triangle. Yeah. So I think if you feel like it, yeah, waiting might be for the more cautious people. For those a little bit more aggressive, maybe now is the chance. Okay. Let's have a look at the daily chart. So here we can see this is the most recent downtrend. Okay, so this is the weekly triangle, yeah, the white bit, and we can see that we are pushing lower. And we did have a little bit of a retracement higher as expected. There you go. And we can see that the resistance of the weekly triangle, it's called like a pullback resistance, is holding, which means that, yep, we are truly bearish. We also did, the level also coincides with a 38.2 Fibonacci retracement level of this preceding up leg, which means that the market isn't really going for like a deeper correction. So since the market is pulling lower again, we can now remove this. Overall, the idea is to pull lower towards 77 fairly soon. What are the tools saying? We do see that, yes, the stochastic is still has room to grow before moving into overbought territory, but with the candle moving lower, I don't really see much potential for gains right now because no signal is being given. Yeah, and what's happening on the chart takes always precedent over what's happening on the stochastic, or on the tools anyway. We do see that the MACD is making lower lows and lower highs, so that's confirming the bear trend. Now we're a little bit sideways, so let's wait this out. Maybe some, as I said, want to wait until 77. And that is it. I'm not going to go into too much detail here because it's pretty much clear cut. I would abandon my bearish near-term opinion if we push above the daily channel, which is currently defining the trend. Let's have a look at the 15-minute chart as well. I think the video is getting a little bit too long right now. So we are a little bit in a range, as you can see, but we have broken lower, so it all looking fairly bearish as well. Thank you very much, everyone. I hope you enjoyed this video. This is my weekly attempt at sharing my technical analysis views of the European energy markets. If you're interested in having this on a daily basis, if you want to talk to me regularly, or if you want to see our technical analysis reports on the dashboard, or if you want to work out your own methodology, then do get in touch at clevermarkets.com. That is all we do. This is our bread and butter. It is a technical analysis research firm. So do have a look if you want to level up your team's technical analysis game as well. Thank you very much. Have a good week. Happy trading and bye bye.